In line with Fed Chairman Ben Bernanke's recent announcement that the US Fed will be unwinding its bond purchase program, essentially tapering off the stimulus that has been in place in US markets of recent times. We've seen quite an extreme weakening in the rand under the assumption that there will be an unwind of the phenomenal emerging market flows that came in from foreign investors and have supported local markets of late. In line with this, we've seen quite a lot of interest from some of our clients looking to diversify their portfolios, perhaps looking to unwind their local equity portfolios and gain exposure to foreign markets using more sophisticated products that are available to the market as we currently speak. What we have at the moment is a product called the IDX Single Stock Future. It's very pertinent at the moment, in particular with rand weakness and associated with the blowout in bond yields. Essentially, how this product works is it gives a local exposure to a local investor into a foreign underlying using the mechanism of a single stock future as governed and regulated by the South African Futures Exchange. Essentially, how the product works is Investec, as a market maker in the product, will take an order in a particular underlying. Let's say somebody wants to have a look at Apple, Google, Microsoft, one of the big IT players offshore. We could even play in a multinational, perhaps a multinational oil company. We have had interest in foreign banks. Bank of America is one that's quite pertinent at the moment. We've also had interest to play in other jurisdictions outside of the US, in particular in Hong Kong, in a stock such as Tencent, which, as we all know, provides a large part of the market capitalization of a locally listed counter, which is Naspers. Essentially, what we do is we'll take that order and we'll put it through our vendors offshore. We will gain exposure to the share outright on behalf of the client. We will then use our FX desk to buy the dollars as needed to actually settle that transaction and bring that dollar spot exposure back onto the South African Futures Exchange using the local interest rate assumption and give that client an exposure through a margined single stock future in rand on that particular underlying. I think if we quickly talk about the benefits of a product like this, essentially one is gauging exposure to a foreign underlying. One is also taking some foreign currency exposure. So one needs to understand that as the rand weakens, so the value of this future will appreciate. And there is an assumption out there that if there are to be major outflows from local markets, there could be a period of rand weakness ahead.